All right, we're live. And of course, I am with the golf mom CPA herself, Joyce Highlander. I was just telling Joyce right before we started the live, I have found so much. First of all, I enjoy doing these. If it's not very evident that these live streams are extremely fun to do, to talk to some of the best professionals out there who serve law firms and help them to operate in a more efficient manner. So that's just been a lot of fun. But what I found, I've had a lot of success in just keeping these as organic as possible. You, viewer, are a fly on the wall. And, this is we're going into Thanksgiving week here today. So we're going to talk about the perspective from the technology side and then from the accounting, financing, bookkeeping side of law firm operations. What are the things that you need to do before the end of the year to set yourself up for a strong 2026? So we're going to go for approximately 20-25 minutes here. Like I mentioned, this is for all the firm leaders out there who want to set their firms up for the best start for 2026. That means if you are someone who does not want to set your firm up for success, then you probably don't want to watch this live, because I can tell you Joyce is going to be dropping some bombs that you are going to want to hear. But Joyce, I mentioned the Golf Mom CPA thing. I think we should give people a little context about where that came from, because I think when I originally met you, the one thing I knew about you before I knew about your proficiency and your skills helping law firms was the fact that you are an absolutely phenomenal avid golfer that I would never go up against because I would be embarrassed.
Oh, hi Jay. So yeah, this is going to be totally unscripted, and Golf Mom CPA just kind of comes from I started playing golf when I was 5, and I am a CPA that's willing to do an unscripted webinar off the cuff. So that's a rare find, but I am a female mother, fun golfer. But I am not amazing at golf. I'm decent.
I've seen some of the drives that you've posted online, and I'm like, yeah, that's I'm lucky if I can get it to go straight down the fairway.
Yeah.
I mean, like seriously, it's I went out with my friend Marcus this summer. He was sort of helping me out because he's like, dude, you're in business. You got to learn how to golf better than you do. So, Marcus, if you're watching, thank you for the tutorials this summer. But yeah, I was finding myself in the sand bunkers and and they were like the course we were at was a little flooded, so it was just like, you know, just leave it there. Don't worry. So I'm sure
Yeah.
you've never experienced that.
I have for sure. Lots of blood, sweat, and tears on the course. But that, Golf Mom CPA kind of comes from that, is that there's so much that you learn on the course, like perseverance and kind of putting up blockers. If something bad happens, you move on and go play the next hole or line up for the next shot and give it 100%. So that's really what resonates with me as far as like the game of golf and how it applies to business, and what are you bringing, what did you learn from all that, and how is it contributing to what we're doing for our clients every day.
Yeah, no, I'm with you there. And, on the topic of what did we learn and how does it contribute, what I've learned over time that I've gotten to know you is that, and by the way, Joyce is a member of the managing partner advisors community as well. So she's uniquely positioned. She has all these insights about how the legal profession operates. I know, Joyce, you had a long career over at PwC. You were sort of helping law firms and getting their books in order. And I've got several friends who I've met over the course of running my business who have all told me great things about clients that they referred to you to help with, things like their year end wrap up, or they've got a big audit or whatever it might be, just getting their financials in a state that's ready to go. And then from my perspective, for those of you who don't know, I run Paragon Tech, which is a legal tech consultancy. So we focus on enabling lawyers to get the most out of their case management system first and foremost. So you're paying the full subscription, so make sure you get the full functionality out of it. And then helping them to identify if there's any supporting tools that they need to operate at peak efficiency within their firms. So I think we have an interesting mix of professionals here because we all interface with our law firm clients. And let's face it, year end's coming up, and there's tasks that are going to need to be required in order to sort of end the year on a high note, to organize the firm so that way everything is ready to go, so that next year they can hit the ground running. So I'd like to just focus on that. I mean, are there any major activities that you see that law firms are typically missing when it comes to low hanging fruit. I don't know whether that'll be, with collections and going in and making sure to get those reminders out, to get bills paid, or if it's trust accounting or, cleaning up their chart of accounts. I sort of have a glimpse of what some of those things might be just from the technology support side, but I'm curious from your perspective. You get into the weeds with firms. So, what are some of those low hanging fruit items that just need to be completed by year end that you can see if they're not completed, create a mess for the upcoming year?
Yeah, so all of the above for all of the checklist items that you just went through, all of those have to be done. But the low-hanging fruit it is almost one of the things I would think about is just sending out an email to the vendors, making sure that you have a W-9 for them, and if they're a 1099, because over the holidays, you could send an email and then send a reminder, every 2 weeks until you get all of your W-9s from your vendors. And that'll make your year end so much easier when it comes time to sending out 1099s to all your vendors.
Hmm. So I know, let's get a little bit tactical. We won't go so in the weeds, but I think this is an area that many firm owners would find valuable. I know for me, I've been a business owner for the last 12 years, and I still feel like I barely understand the purpose of W-9s. So we're not going to embrace our hubris today. We're going to break it down. So for the folks out there who don't understand, and me, who don't understand the sole purpose of what a W-9 is in relation to a 1099, I understand there are some, and this is obviously very based on state and geography, so you'll have to consult with your local tax laws and regulations. But I understand there's also some minimum amounts that a vendor would have had to be paid or collected in a certain time period to make them eligible. So can you just give us a general overview of what the purpose of the W-9s are for, and I guess by extension what happens if you don't collect W-9s for your vendors?
Well, if you don't have W-9s, then you're kind of scrambling when you actually have to file because the IRS wants to know if you paid somebody, is that entity or company or individual reporting it to the IRS, paying taxes on it. Generally speaking, it's about $600. If you paid somebody over $600, then you kind of meet the threshold to be one of those people that get a 1099. But certainly it can get very complicated. There's like a whole flow chart, yes or no questions that really iron out if you do need a 1099 for somebody or not.
Hmm. So do you find, is this an area that creates a decent amount of frustration or friction by year end tax filing time?
It's really, from what I've seen, paralegals and admins, the law firm owner's spouse frequently ends up being the one responsible for this, and it does create a lot of dread and tension and um, pain points. So certainly there's ways to get this done so much faster and have things ready to go, or delegate it to an outsourced accounting firm.
So I'd imagine also, since we're talking specifically to the legal practitioners out there, if their firm has of counsels in their bench of professionals, those of counsels in many cases are 1099s. Would those of counsels also need W-9s as well as the outside vendors?
It depends on if they're an entity or an individual, so I'd have to know a little bit more, but certainly probably a 1099.
Yeah. So I think the takeaway here is that there are some variables here. Obviously, as most things are, it's difficult to paint in broad strokes, but you should absolutely consult with your team, either if you have someone, a CFO in your firm, or you have someone assigned to that particular task of creating and capturing all the details for the W-9s. Make sure to consult with them. And obviously, if you don't have someone like that, then Joyce is open for business, right? And she can handle those kind of concerns. Now, I want to talk about something that I think is a little bit, it's interesting, and it parlays into your world as well, Joyce, which is that oftentimes my firms, let's say they've implemented a new case management system and they have case management A, let's call it, they were a firm using Neos, right? And then they moved to Clio. So if that transition did not happen at January 1st, which it oftentimes does not, then there is inherently data that exists in the old system. There are invoices, their closed invoices that exist in the old system, and then they'll sort of have a cutoff date, and we'll begin the new system. They start billing in that system, so then they have all their reports, their closed invoices, their WIP reports, all of that which exists inside of the new case management system. So firms who so obviously to set that up properly, you have to set up the starting and ending account balances for their operating accounts, the IOLTAs, the credit cards, things of that nature. So my question is that for firms who have implemented a mid-year transition, maybe they're using a system that that all of the data does not live in QuickBooks. How do those firms handle the process of, like, I guess what I'm asking is from the, and I never see this. This is sort of behind the scenes, but from the bookkeeping tax side of things, are there any considerations that those firms need to make when they have two systems of record in one calendar year?
Yeah, so that would tie into if a law firm is accrual it has accrual accounting or cash based accounting. The cutoff with accrual accounting involves the accounts receivable balance. So what you were saying about the cutoff date is at that cutoff date, when you're switching systems, you would know what is my total accounts receivable for that. And you could either, like you said, write out the system and let those invoices roll through as they pay. I'm going to enter it here so that, but all my new invoices are going to be in the new system. But the but that being said, you would just kind of validate what is my AR in the old system as of the cutoff date, and then what is the AR in the former system in the at 12/31/2025.
Mhm.
That would
That's
help stay
interesting.
organized. Yeah.
Yeah, I wonder, is there a skew towards either type of model, accounting versus Actually, let's do this before I ask you that question. Can you just give us a quick, explain it to like you would talking to an 8-year old? What is the difference between a cash based and an accrual based law firm, or for that matter, any sort of corporate entity?
Cash based is money in the bank. So if your bank statement says that Jay paid you a $2,000 retainer, that's money in. That's cash. In accrual basis, if you haven't worked and earned that $2,000, then it's like a payable, or it's like you haven't earned it, so it's not recorded as revenue yet, and it's sitting as you have to do like a prepaid from Jay.
Hmm. So, from a tax perspective, obviously there are implications in the accrual basis. You pay the tax in the tax year that you've recognized that, or that you've created that invoice. So, if you bill a client, for a $5,000 retainer, even though you haven't worked for and earned that income, then there would be some tax implications there. Is that correct? Did I
Yeah,
get that right?
sort of. It's also the retainers are also something completely different as far as income because it's a retainer instead of um, re, money in. So it's hard to say. I don't think you'll. I don't know.
Yeah. So the retainer, there's a little bit of a difference there because technically it's money that the firm has not earned yet. It's sitting in a trust, right?
Hmm.
And and then that would, once the firm does the work, whether it be hourly or flat fee, whatever it is, once the firm begins the work or completes it, that's where the difference would occur between the cash based and the accrual based firm. So my next question for you would be, based on the firms that you've worked with, does there seem to be a favorite type, or do firms tend to skew one way? Like, is it, do certain practice areas tend to prefer cash based versus another accrual, or does it just depend on, I guess, the professional who set up that corporate structure?
It definitely depends on the choice of the business owner. I've seen, as far as trends go, small to medium goes for the cash basis, and then larger firms, like 100 employees up, may do accrual basis.
Hmm.
Is the
Why is that?
volume.
I've sort of heard that as well. Why? What makes it more attractive for a larger entity?
The volume of transactions is larger, so it's advantageous to have it show, look at all the stuff that we did and we have in the works. What do we have in the pipe? And so if you had um, a lot of money coming in and you haven't really earned it yet, like let's say I invoice you $50,000 at the end of the year and you owe me $50,000, I'm going to record that as I'm owed that. So it's going to be part of my income. So it will make you have a better financial outlook. That being said, there's always the flip side of the coin on the liability side and the payable side. But I think a big change of that is whether you have the budget to afford the expertise to be able to hold that record accurately. You know
Hmm.
what I mean?
Yeah, that makes sense. I mean, I'm always amazed when I talk with tax professionals such as yourself, and it's like there is so much nuance in this. There's a YouTuber that I follow. Maybe some of you in the audience will know where I'm going with this, but there's a YouTuber, huge YouTuber. His name is Whistling Diesel, right? And he's the guy who did the test of the Tesla Cybertruck where he was like jumping it off ramps and the bumper fell off, and there was this whole like debacle where like Elon Musk got involved, and he's like, the bumpers aren't weak, it's because you're testing it in a way that was not, the truck wasn't designed for. But like, so he's the guy who did that. So he was recently arrested like a couple days ago or maybe a week ago because for tax evasion. The FBI came in and like he had no idea what was going on. It's on his YouTube channel. I just saw the video. And what winded up happening is he bought a Ferrari SF90, which is a very expensive vehicle, but he owned it for a very short amount of time, and he winded up doing a durability test for it. Like he was off roading it, using it in a way that wasn't designed, and Ferrari didn't like it, because they don't like to see their cars being abused in that way. And he winds up shredding it in the end. Well, apparently, it was something related to the where he registered it, and the time period that he owned it. The state of Tennessee didn't like that, so they came and they got the FBI involved, and they arrested him. So I think it's like, and so he's being. I was interested. It was interesting because he's being public about it so quick. When there's still pending litigation involved, and he went public with this thing. But I think the whole concept is like there's some murky, sort of ambiguous language around like how long do you have to own a vehicle to do you have to be a resident in the state? I think it was Montana that he registered it in, which I understand many people do. So like there's all these loopholes and nuances, and us mere mortals who haven't studied the tax code are probably not well equipped to handle these things. So it just amazes me, and it's a constant reminder that we need people like you to help make sense of this, because I might understand legal tech and AI, but I have no idea when it comes to taxes, which is why you have a good team behind you. So Joyce, if we can wrap up here with, I'd like to know if you can give me a list of the top three, and if there's not three, give me the top two. If there's not two, give me the top one. But give me I'd like to know what are the top three activities that law firms should do at year end to set themselves up for success going into 2026.
Yeah, like your piggybacking off of what you said, I'm thinking that the way that accounting and AI and automation all come together and how you and I work together is that what you're doing flows through to the bottom line. So all of the mapping and integrations between your CRM, your ERP down to your general ledger, that's what's going to move the needle as far as what does this reporting makes sense to my CPA or my accountant for year end. So it's very cool to take the time right now between now and year end is looking at your chart of accounts, seeing if there's duplicates, looking at that meals and entertainment expense section. Is any of that client billable and needs to be moved up to revenue? Is any of that meal for myself or is it for a business meal? Those are really like low hanging fruit to find time for right before year end, because the cleaner that your financials are and the most accurate is going to be what really gets you the most tax friendly financials that you could get the good strategy and benefits to know what to do with that information.
Mm, yeah, well said, well said. And for the folks out there watching, as we wrap up here, I'll give you sort of my top three from a tech perspective. So, in your law firm, one, go through all of your open clients currently, and ensure that the ones that are open that need to remain open are, but the ones that have been closed out, make sure that you close them. That's a constant source of disorganization for firms, is when you have open matters that are really closed. So figure out the date that that matter closed, whether that be you send out a letter to your client, informing them that that the matter is beneficially closed. And, if there's a window or period of time that you typically wait to actually close that matter, just go ahead and do that. The next thing would be to go inside and audit the total number of individuals in your CRM. So, typically the way most firms operate, if you're in something like Clio Grow or Lawmatics or Attorney Fuel, you'll have a place where you recognize clients who are potential new clients who have not yet retained the firm. Ensure that you have all their contact information updated, that you have the status updated. Again, data hygiene, this all comes down to, is so important to ensuring that your firm can operate smoothly. The less noise that you have to wade through, the better, right? And then lastly, what I would do is I would have a conversation with your staff and talk about make sure that your strategy for growth is aligned with your technology currently in place. So many firms, they'll have on their roadmap for 2026, we want to implement AI, but it's my thesis that that's not simply enough. That's just keeping up with the Joneses. You need to have an intentional strategy around that. So get your team, figure out what is our largest constraint within the model. There's so many things that you could solve and so many metrics that you could try to enhance, but which is the low hanging fruit that allows you to move forward the fastest? Do you need to respond to clients in a more timely fashion? That could be a good use case for AI or automation. Do you need to provide more consistent client updates? Do you need to categorize the time that you're spending on matters and create the narratives in a more efficient manner? Are you losing out on billable time there? So there's so many things you can solve for. Figure out what's the largest constraint, and typically you do that by meeting with yourself if you're solo, or your staff if you have a larger firm. Figure that out and put a strategy together.
I
So those
thought
would
of
be.
something, Jay.
What's
I thought
that?
of something I have to say before we end. The bonuses that you're going to pay your employees. I have to say, I have to bring this up because if you're a law firm that pays bonuses by quarter for your employees based on utilization, realization, all of those things, you do not want to be running payroll on December 31st. So think about it, have it top of mind, and we can continue the conversation if you want to reach out directly to me.
Yeah. Where can people find you at?
I am on all of the platforms, but LinkedIn and Instagram, Golf Mom CPA, Facebook, Golf Mom CPA, and TikTok, Golf Mom CPA.
I like the consistent branding across the board. So, folks, there you go. There you have it. Joyce is a professional that I've known for quite some time here. I've luckily I've had the privilege of seeing some of her work with some of my clients, so I can attest to her. So, if you have any issues or you're thinking about needing to make a change in the individual that you have within your firm for your financial planning, not financial planning, but financial, bookkeeping and fractional CFO services, Joyce is your lady there. So, that'll do it for today, everybody. We hope that you have a fun and productive week. Safe travels to anyone traveling for the Thanksgiving holiday. And we will see you on the next one. Bye.
Thanks.